here. And so, Megan, when I look at this, though, I hear everything Kevin says from the trading aspect to the business model aspect to, maybe you shouldn't do this as a consumer. But at the same time, what I think this company's potentially doing is beneficial to the consumer in the sense that they're bridging the gap between the extraordinary situations you can find yourself in credit card debt and providing access to capital for those who maybe struggle to do so at much more affordable, transparent rates.
Yeah, I think that you keyed in on a really important factor here. Affirm is trying to present itself as the anti-credit card. I think that's really interesting. And what's interesting is that consumers are they're willing to adopt this mindset. They're also, talking about, paying off their credit cards. And whenever we look at the amount of people who are talking about opening up a new credit card, that's on the decrease. But on the flip side, when we look at mentions of people who are utilizing these buy now, pay later services, those are on the rise. And so you see, this nice trajectory. We saw a little bit of flattening, especially during the height of COVID, but now that's starting to pick back up. We're seeing those mentions up about 6% quarter over quarter. And this is really the niche that Affirm operates in. And, it operates, as Jenny mentioned, there are a lot of competitors. You've got Klarna, you've got Afterpay, you've got Sezzle, you've got this Pay in 4 that PayPal has. And whenever we look at all of these, especially on a quarter over quarter performance, heading into 2021, we really start to see Affirm outperforming. We see this consumer demand, consumer rates of using Affirm are on the upswing. And so this is a name that it's definitely on our radar because, we like to see these macro trends. We like to look at these shifts in consumer behavior, how consumers are spending. And then you like to see that, serving as a tailwind for a company like Affirm. And so you can see just in the last month, you start to see that uptick again. That's that green line that mentions of consumers who are actually using the Affirm services. On a year-over-year basis, those mentions are up about 79%. So a lot of this is related to the brands that they are partnered with, as well as consumers' likelihood to utilize a service like this and not have to pay interest fees. Have a set amount that they're paying and not feel like they're being penalized.
Megan, this is Jenny Horn spoke to the competition in this space, and you just mentioned a bunch of the companies that are competition in this space. What is this company's, what do they do better than anyone else? What differentiates them from their competition? Is it the interest rate? Is it the low payment? What is their selling point that makes them popular?
I think that right now, a lot of the main drivers are who they're partnered with. You look at, they are the sole financer for Peloton. That's a really significant edge. You have other big names like Walmart, like Shopify, integrating inside the Shop Pay functionality across millions of merchants. That's a really powerful edge. So when you're a consumer and you're shopping, maybe you're not going to, seek out Affirm, but whenever you're checking out, if you have this option, especially on a bigger ticket price or bigger ticket purchase, then you may be more inclined to use this, especially because, there isn't an interest rate. There's no penalty for spreading something out. I think it's also interesting, while Peloton obviously surged over the last year, Affirm has partnerships with other types of ways that consumers can purchase, including experiences. They have a partnership with Expedia, they have a partnership with StubHub, and they've noted that consumers are likely to, want to be able to finance even, these travel plans that they have coming up, or maybe these big, concert ticket or things like that. So I think that there's opportunities, even in a reopening economy, that consumers could engage with a brand like Affirm. And I think that that's really what Affirm is doing well right now, is leveraging those retail partnerships and, integrating themselves at the point of sale, so consumers can use the product without ever even having to leave that, that brand's site when they're checking out.
I think that's an insanely important point, and it provides that access to capital on a much smaller scale than traditionally possible. And so it's really important, the disruption that we're seeing within not just retail, but really the financial world as a whole as a result of companies like Affirm and PayPal and Square. My question to you then, Megan, I would assume that those who are responsible with their finances like to have things consolidated in as little different apps and services as possible. So my guess is there's some stickiness. If Affirm's an option and you have that, if you're using it before, you probably want to use it for your other one so it's all in one place. So how important is it for them to continue to get more and more merchants and build that out? Because if they're available everywhere and I like my experience, which I'm sure you have some happiness data, I'm more likely to come back and use them again.
Yeah, whenever we look at Affirm, it is exactly competitive with its peers, even big peers like Klarna. I think from a total volume perspective, Klarna has a higher volume, but Affirm is growing quicker. And so I think that that's something that we'll definitely monitor moving forward, that continued, consumer happiness. I know just from a personal level, I recently, got a Peloton, and Affirm is the way that you can finance that Peloton. And so now have the app, and I see it more, I recognize it more, especially once you have that. Once that's on your radar, you definitely see it pop up in your world more. So I think that there is a stickiness element there. But in the meantime, obviously this is a new IPO. There's, a lot of short-term volatility. You can see that on the chart that you're looking at right now. But as we start to see, as time goes on, we start to see this continued adoption that may present an opportunity. And so this is kind of why we brought this to you today, is this is one that we're watching, that, we're seeing consumers adopt this product and adopt this service at higher rates. Meanwhile, the stock has pulled back significantly. So it's definitely one to keep on your radar if this is something as an investor that you believe in.